Hi there, I'm Katherine Taylor, the lawyer for business owners. I've already done a couple of videos on sales tax. Very boring, but very important. So what I'm going to do in this video is kind of step back and just explain the overall factors that any state may use to determine whether a company that sells goods or services that go into their state will be subject to sales tax in that state. So basically, and one thing that's very important is to understand that sales tax is based on state law. So your company may be located in one state, but there may be a state across the country that goods or services are sold into, and you, as the owner of the company, are going to have to navigate that state's sales tax laws. So this video is really just kind of summarizing the factors that most states use to determine whether a company's goods or services that are sold into a state are subject to sales tax. So the biggest factor, number one, the biggest factor that most states use is when a company has a physical presence in its state. So let's take a CVS drugstore, for instance. CVS may be headquartered in, I don't know where it's headquartered, but Iowa, but it has physical presence in the form of brick and mortar locations in many states. And so clearly, any physical presence in any particular state will subject that company, CVS in this case, to sales tax in the state in which that physical presence is located. In addition, even a company that stores inventory in another state or has fulfillment centers in another state could then be subject to sales tax in that state. If a company has agents or representatives that frequently travel into the state to market products or services, there could be a situation where that company is subject to sales tax in that state, even if those particular people who travel into that state aren't actually selling anything. So anything that's sold could be subject to sales tax, even if somebody from the company regularly travels into the state. Okay, so that's physical presence. Another big factor that states use to determine whether a company is subject to sales tax in its state is what is called an economic nexus. And basically what that means is if you sell enough goods or services in a particular state, you're most likely going to be subject to sales tax in that state. After the Wayfair case that was decided by the Supreme Court back in 2018, many states took the lead from the Supreme Court and established statutes that now tax companies that have sales within the state, even if they have no physical presence. And many times that nexus or that economic nexus is as low as $10,000. It can be up to $500,000. So again, it's based on a state by state reading of the particular statutes in which goods or services are sold. A couple other situations where a company may be subject to sales tax in a state are marketplace sellers. Marketplace sellers are those organizations like Etsy, Shopify, Amazon. Those marketplaces are now being required by many states to collect sales tax for their third-party sellers. So if you have a company that sells on Amazon or Etsy, that company may be required in certain states to collect sales tax on sales within that state. So this is a lot to take in. We can help. We've scoured many state statutes. Call us or email us and like and subscribe to this video. Thank you.